So have you ever sat there and wondered how the banks trade, the big institutions, what everybody talks about, right? The big boys, the big fish, the whales. Have you ever sat there and wondered, how can I trade like these people who win 99% of the time while I lose 99% of the time? Well, in this video, we're going to go over exactly how the banks trade so that you can be aware of these very key levels where the banks come in to start trading. So let's get into it. So to first understand how the banks trade, we have to realize one major difference between the banks and the retail trader, and that is their capital. Okay, so the banks trade with billions of dollars, and retail trades with thousands, maybe hundreds of thousands of dollars. So what's the difference here? Well, the banks can't afford to go all in on one position. So what do? Well, instead of getting in like a retail trader here and then getting stopped out here, the bank trader, or the banks, will get in here, they'll add to their position here, and they'll add to their position here. Why? Because they can't afford to go all in on one spot. Instead, they use their billions of dollars to get in at multiple spots in the charts. Something else we need to realize about the banks is they are not trading on a 1 minute time frame. They're going to be trading on at least a daily time frame. Sometimes maybe on a shorter time frame like a 12-hour time frame. Very rarely the 4-hour time frame. Mostly we're going to see the banks trading on the daily time frames. Retail traders try to trade on the 1 minute, 5-minute time frames. Why is that? Well, it's because the banks, if the banks were to try to trade on a 1 minute, 5-minute time frame, they would be absolutely destroyed by the spread. Okay? They would be destroyed by the spread. They have too much money to trade on that small time frame. They need to trade a bigger time frame where there's very little spread and they can put in millions and millions of dollars throughout the day rather than throughout several minutes. So now what if I told you that there was a way to see on the charts where these banks are actually getting in? Well, that's exactly what I'm telling you. So let's get into the actual charts and mark out where these banks are getting in. So here we are on the pound Japanese yen daily chart where the banks are going to be trading. So you can see that I have two levels here. So why did I put these two levels here? Well, you'll notice that these two levels are pretty much the two levels that signify the lows before we get an explosive move to the upside. Okay? So what this means is that lots of buying happened within this area right here. Okay? And you will see how this reacts in the future. So the banks, you can clearly see the banks, or some large institution, right, had to have been putting in a ton of money in this area, right, for this to occur, this large area here. And this is what we call demand. This is where lots of money is sitting, okay? So we know that tons of money came in here to the buy side. And what else do we know? Well, we know that if it comes back to that area, there's lots of money there that they're going to want to defend. They do not want this area to break. They have money at risk. They're going to buy more. Okay? So let's move on to the charts, continuing. We don't have really any major other levels here other than up top here, right? So let's mark out this level here. So you can see this is where the money came in to just absolutely explode price down. Okay, the key here is explosive moves, not little moves like this, not little moves like this. This is somewhat explosive, but not really, you know, in comparison to this, right? Explosive, you know, this is not very explosive. All right, so now let's continue. Okay, so right here, daily chart, massive move down. You can clearly see money came in right in this area. All right, so we're going to mark out the top, this high right here, down to just about the area where it encompasses the most highs. Okay, so one high, 2, 3, 4, 5 highs, right? So this is an area where lots of selling took place. So now let's see what happens. Notice that, okay? Notice how it just instantaneously, right on the dime, look at this. Look at the accuracy here. Because this zone here is what we call an area of supply. This is an area of demand because it's below, right? This is support. Demand and support are the same thing, right? In this case. And this is resistance or supply. So demand equals support, resistance equals supply, all right? So look at how it turned around right on the dime there. Because there is money there that needed to be defended, so they brought it right back down because there was tons of strength moving into that move. Now we're hitting our previous area, right, where this explosive move happened. Area of demand. Let's see what price does. Look at that. Another move up and out of that area. And then, again, what happens back here? In our area of supply, resistance area, right? Look at how, again, defended straight back down. And look at how it acts. I mean, look at that. Look at that. Again, here. Look how many times this area held. Alright? So you can see how these areas are very key levels on a daily basis. Alright, so how can you use this in your trading? Well, you can use it on smaller time frames to be aware of larger levels in case, you know, if maybe you would want to look to take a breakout on a smaller time frame here, but if you knew that there was this major area of resistance, you would not want to be buying this, right? Nor here, nor here. So, again, look at here. Back in our area. Reacted. But on the, let's see here, 1, 2, 3, the third test, it did break through. But what do we know about banks is that they scale in their positions. So look at here. We have another area right around here where you can see massive buying, massive buying. Now you can see price did break through it, but banks were not buying right here and that's it. Banks were buying there, here, here. And so these areas are not always exact because banks have to scale in. But you can see that was pretty much the bottom of this move where it now reacts. So you can see tons of buying coming in now. Let's remove this just because it's a little bit confusing for us. Tons of buying come in. Buyers are now in control. Banks are buying. Where's it going to turn around again? Look left. Major area where buying occurred. Look at that. Look at this. Okay. Respected it again. Even though it broke through here, that does not mean it's totally invalidated. If there's enough strength to the buy side, it will happen again. It will be respected again. Okay, now look up here. Let's get rid of this level. Where did the major selling occur? Right here. Massive move down. Major selling. It happened right at this area up here. Look at the reaction. Okay, I can do this forever. Alright, that is how banks trade. These are the levels that banks trade. They're going to be the areas where major buying and selling occurred, and I showed you over and over again how these levels are major turning points. Okay, you can clearly see. Look at here. We went over here, here, all up in here. We deleted some levels right here, right? So the banks are always looking at these levels, and you should be too, because this is where the bank's money is hiding. So if you enjoyed this video, you can give it a like, which really helps the algorithm, and you can subscribe to stay up to date. I'm posting every single day, even on weekends, or at least I'm trying my best to. If you have any questions, leave it in the comments down below, and hit the bell notification to get a notification every time I post. So good luck trading and stay safe.